Stevie said it was really bright on my face the other day. You know why? Because I changed the bulbs and they went from white to yellow.
That's better. Yeah.
It's better, you think? Or should I make it a
No,
little
yellow.
dimmer?
Yellow's better.
Make it a little dimmer?
Yeah.
Okay. Does that look better?
Yeah.
Or is that too much? Oh, yeah, I see it right off your screen. Yeah, see how it shines. Is that better?
Yeah, I think so.
Or lower, or what?
I'll stand here. Let me see.
Okay.
Yeah, you got good natural light. I think it's fine.
Yeah?
Yeah. All right. We are ready.
Good morning, guys. Saturday, 10 a.m. We're trying to keep this up on Saturdays. We're still working on Wednesdays. We want to see if there's an audience, if people are interested. And it looks like every week there's more and more. Good. First of all, it's not me, it's the markets. The markets give you the attention. The markets are magnetic right now. Why? They're moving both ways, scaring you, making you smile, then scaring you again. Then you're becoming news sensitive. You become very impulsive. What does it create? Opportunities if you don't become impulsive. And there's one thing I always learn about the markets. You can't be reactive. You got to be proactive. So if you're proactive, means you got to prepare. And that's what we try to do every week. And we're only here on Saturdays for now. With the group, we're here every day and night. Okay, as you can see, these bags under my eyes, you know what this is from? This is from me getting up 2, 3, 4 times in the middle of the night, trading the Asian time zones, trading the European time zones. Why? There's opportunities. And it's not only trading opportunities, it's not only quantity. You can't quantify it, it's information. It tells you. It's kind of like if you're playing cards, knowing what other people have is just as important as your cards. So if you know the way Europe is thinking, if you know the way Asia is thinking, you know the way you're thinking, it gives you an idea what the setup is. When markets like this with a VIX that's high, that's got reversals in it, that's what you want to know. Why? Because you want to know which way the market leans. And when the trades that we've been successful on lately haven't been something that we wait for, it's something we wait to set up. And what we look to set up is for reversals. So if a market looks beat up, and then we see signals that turn the reversals, they become extreme. Why? Because the speed limit's higher. If the market extends on the upside, then we look for trades that can come off. This week was a perfect example. Why? Because the market came off of 2 good weeks, a week of bouncing, and then this week was a week of extending. So this was a week, if you're long, you enjoy the ride up. Our opinion is it's starting to extend. Okay, and everybody's getting comfortable. Now they're getting euphoric. Now earnings are making them more comfortable. And our opinion is we're still going to sit around here, and the market's going to set up something this week where we're going to come off. And if it comes off, it could be hard. Why? Because traps were set. I'm going to show you some of these traps. There's a couple of traps we're going to talk about big time, but so let's go to the big name stocks, because that's what the one that's made everybody smile this. Okay, now just keep this in mind. Okay, this is NVIDIA. It's in the middle of the range. Okay, so everybody's euphoric here. All it did was bounce back where it probably should have. This was overpriced. This, in my opinion, was a stretch down. My opinion is this is where it should be, somewhere around here. So if that's the price, it can sit here. But what happens is, it makes everybody say, oh, the whole market's turned. You need something like this to make the market go higher. Okay, fine. The only thing that looks consistently strong, still looks like room, something like a Meta. Okay, why? Because Meta's got a story where it's got the, what they say, they got the eyeballs. Okay, it's got viewers that doesn't change, so you can always talk to them. But it's another one. Looks explosive. Okay, from here to here, where is it? Middle of its range. Same thing. But people were super bullish here and caught. People got bearish here and got out. Now they're sitting here and they're getting bullish. They didn't get bullish here, they didn't get bullish here, they got bullish here. This is what you got to worry about. The week ended strong, but in my opinion, it's an extension. You get a little bit higher, and then you can start to breathe. Another trap out there, the oil market. And this we're going to talk about, and we're actually going to make a long video about it, which we're going to put up later. We'll figure out how to get it to you guys. But the oil market, in my opinion, is setting up for a big trap. It's a trap, bearish now, and it's a bear trap that can go higher. Oil this week, it came out with some news, and it came out with news a little while ago also, that OPEC is going to continue their production increase. So what did oil do? Broke $60. This was a large technical sell order. Hedge funds, institutions, managed money. Sometimes you get these large, long-term indicators or these technicians, and they put out a sell rec in oil below $60. World can't get in a flash. It's not turning a little boat. This is turning a giant ocean liner. Now, the world is naturally, globally, long oil. Now, if the market gets to an area and they get out and they're flat oil, it means they don't have a position. That's bearish. When you get a sell order where people recommend to go short, the world is very short, extremely short, oversold. Doesn't mean they're wrong. It just means when they want to get out, it's going to be very hard. What happens here? You break $60 in oil. Market gets a sell signal, pushes, pushes, pushes. Fine, they're right. But this, let me clean this up a little for you. This move down is people getting into the position. Okay, like I said, you can't just hit a button, everybody gets in right here. So they push, and now you're going to have some work being back and forth. With the group, we've been talking about this for the last 2 days. Okay, RNTR group. Why? I've seen this many times. I've been trading oil for 40 years. Okay, if people were getting short oil at $75, at $72, at $78, there's something behind it. Below $60, no one on the planet, the countries on this planet don't want oil below $60. Why? A lot of it is their lifeblood. Being short down here is not productive. This is speculative shorts. So what the thing is, the sensitive side will be the upside, not the downside. Now you got news coming out about OPEC. This should be bearish news coming into Monday and Tuesday. This is the perfect test. Spend a couple of days below $60 again, stay below, probably try to test that low again and see if the market becomes buoyant. What we look for opportunities here is oil below 60. It's fine. You know what's attractive to us? Gasoline below $2. Heating oil pushing down. Natural gas starting to go higher. All of these are indicators that that's what I use to test. Now with the news, people looking at oil, I look at the peripherals. Peripherals are the products. That's what I use. Another thing that's big in my opinion is the futures market. I use that as my indicators. Crude oil, heating oil, gasoline, all in backwardation, which means supplies are still tighter. Demand can turn a little and it won't be the supply to give it to it. So the way I look at it, everything leans to bullish being upside sensitive and bearish being small downside sensitive. So what do we look? We look for opportunities. This is a couple of those. Let me show you a couple of opportunities that we're looking at.
I'm better write out the ticker.
Yes. Okay. Now, I just explained you the whole scenario, right? We think gasoline is too cheap. What do we look for? We think gasoline is too cheap, and that's the one that could go up first. So how do you get long equity-wise? Valero, VLO. That's what we've been trading.
Joanna, my baby.
Excuse me. Sorry about that, guys. So what do? You look for opportunities. In our opinion, it's in gasoline. Valero is the one. Let me put it up here for you so you see the symbol. VLO. This is a refiner. This takes the crude oil, turns it into gasoline. So if oil's down here and it's cheap and gasoline holds up, bigger profit margins. Good for Valero. We'll look at Valero. Okay, we put out a clip of this about a week and a half ago, how much we like Valero. We bought it here. We bought it here. We bought it here. Look at it. Okay, this is with oil below $60. This is what I'm trying to say. These are the indicators. These are the symptoms that show you things. This is what we like to see. This is one way to get in. We look for other ways to get long oil. Okay, not oil. We look for ways to get long the oil sector. And like I said, we think people are distracted by looking at the price of oil. We look for the peripheral sides. We look for, like we said, for gasoline. So that's our opinion. Natural gas, same thing. Pushed a lot lower. Got itself out of its long. The market got caught long, got flat, got itself short, and now they're caught. And now you get some fundamentals that are turning a little. Look what happens to natural gas this week. Okay, we're talking about the energy markets because this is where we think the opportunities are. This is natural gas. It's a nice little reversal. Okay, market got long up here, which we remember all this. We explained all this on the way down, and then we started getting long. And then you got the extension where the market got itself out. See, this is important, and I don't think this is something I learned over 4 decades trading this. Having this is not good. Having a few days down here, that's what gives you the trade. Because then the market gets more bearish and more people are on the bearish boat. Then when they've got to cover, they can't cover. Perfect example, right here. You spend all these days down here. Now you try to cover, you get a pullback. Look what happens to natural gas, up. So now this sector has turned and the market isn't on board. So they might chase it again. You could pull back and have a few of these, but we think overall you have a different scenario here. So this is my opinion.
What's the contract for natural gas?
Yes, well, you want to look at, this is the June contract, but I think you want to look at the July contract. Okay, NGN. Okay, that's on the futures. NGN 25. Okay, this is June. I think you'd rather be in July here. Okay, so that's our opinion. What do we have on natural gas? UNG. I mean, it's like looking at natural gas. That's what it is. It's an ETF replica. But the same thing, it's got room. The point I'm trying to make is a lot of people will long here. Nobody, and we're right back in the same spot. But nobody's long anymore because they got out. They even got themselves caught short. So think about this. You're at the same exact spot, and this is, looks like about 2 weeks. So 2 weeks ago, natural gas was here. The market was long, caught the wrong way. It's at the same area 2 weeks later, and now the market's caught the wrong way this way. So you see the difference in the markets? This is what these commodities tell you. The futures tell you a lot. If you sit there with your eyes closed, say, $18 UNG, fine. $18 UNG, fine. No, two very different scenarios. And this is the example. This is the way commodities trade. And more of these are setting up. We're seeing that now in the grain markets. We're seeing that now in the ways to get long equities. We put out a clip. We put out 2 clips. We're going to put out one more. We talk about the price of foods. They were too cheap. The price of grains were getting too cheap. Soybeans, corn, wheat. So while people are focusing on the grains, how do you get some equity exposure, or how do you get some peripheral exposure? We have 2 ways. One was a processor, which we talked about, Bunge. Another one was fertilizer. We're talking about fertilizer. We put out a couple of clips on MOS. Well, first one, let's go to Bunge, because this is a food processor. Look how that's held up with the grain markets being lower. Okay, that's doing well. The one that we have on, we made a couple of clips. We're going to make another clip this week. Fertilizer company, MOS. There we go, MOS. Look at this, guys. This is how you make money in these markets by using peripheral ways to make money. We're getting long grains now, but we have been long MOS. And we've made a clip saying, 2 clips. First one was right here, was a very critical area. It's probably about a week ago. Then we said, all we got to do is get through here, we can start to open up. Well, we're here through here, we're starting to open up. This is how you catch these trades. There's a big difference here. 27 to 29, it sounds like it's 2 points. Nothing, right? There's a lot of work between 27 and 29. Okay, I want to give you an example, okay? Between 27, sounds like, $2 is fine. Now, $2 is nothing. You went from 29 to 31, $2 with there's no resistance because you opened up here. That's the difference. This takes a lot of work. This doesn't take a lot of work, which tells me it could still open up even more and start to gap. That's how you catch. It's when a single becomes a double or a triple. That's one way. All right. So I gave you my commodity views. We have equity views too. But let's see if there's any questions early.
Yeah, we have a question from Rita. Can you talk about Tesla for this week?
Tesla. Okay, Tesla's one that we talked about this last week. We caught this twice. Not now. We haven't caught it now. Why? Because I think the market, when the sentiment is the wrong way, they get themselves caught. The market was, every story on Tesla was bullish, long. Then we got down here, and everyone was like, Elon Musk is blowing up the country. Anything he touches, we don't want. So the sentiment became bearish. From here to here was bullish. From here to here was bearish. What we did, we caught 2 trades. We caught one from here to here, and we caught a pullback and caught that one from here to here. So we had 2 short-term trades. One we made 30 points, one we made 50. Now, the market is still caught the wrong way, in my opinion. Everybody got out because we pulled right back down again. And now I think we're starting to grind higher. I don't think this is going straight up anymore. I just think this was the wrong price, and this was the wrong price. We got to find a medium somewhere around here. But the market, the same thing. When we were up here, the market hated it. Now the market is probably caught short or not long enough and looking for exposure with the overall market so we can work our way higher. I don't think there's an explosion here, but I think everything is getting back to sea level. This was below sea level. This was way above it, somewhere around here. So I think these big names are in the middle of their range. My point is, all this work and all this bullishness just got it back to where it should be. But the market's hypnotized that everything's got to go back up. Everything's got to go back up. It doesn't have to go back up. It's got to go to fair value. And I think Tesla is just going to fair value. Another example.
Guys, if you have any questions on any stocks that you want us to look at, put in the comments here. Give us a like. We're here every Saturday at 10 a.m. on YouTube. I don't see anything yet, so we can go over anything.
Let's continue. Okay, we're watching metals this week.
One just came up.
Yeah.
SBSW.
Yes, SBSW. That's our favorite way of being long platinum and palladium. We have our entire position on. If I look over, just want to look at my positions to see if I did. SBSW, yes. So we even look to put more of it on. That's how much we like it. Okay, and we're pretty much all in on this one. Okay, this one looks good. We've had the test. Okay, the test was in this area. We had a little bit of a pop up here, which made sense to breathe. We said it could come back, test this area, see how it holds. If we hold here and come in above here next week, which I think is first, I think we could come in a little lower. But if we get above here, we're ready to open up for the next wave. We're all in. You can see you got some bounce here. Went from here to here in what, 2 weeks? This is a pullback, which is healthy. The thing is, you need this to have this. So we like SBSW a lot. I haven't changed my position. Forget about selling. I'm actually looking to add one more piece.
All right, guys. If you have any other trading questions, please put it in the chat here. We're gonna review other stocks. Right now, we don't have anything else in the chat here.
I'm
So
going to give you some stocks that we traded this week. Why? If you remember, if you belong to the group, on Thursdays we have a webinar with Guy Adami from CNBC. Belongs to Robinhood. Belongs to CME. He's a spokesman for many people. You see him at 5 o'clock on CNBC. We talked about airlines. We have an airline position on in JetBlue. He recommended, not recommended, his opinion was Southwest was too cheap into an area. We looked at it, we said, you know what, this makes a lot of sense. And the symbol is LUV. We bought it last Thursday. Last Thursday when we had the webinar. Okay. Right here, he said, but look at this gap, very important. I mean, could you be any more right? Look at this. Talk about a guy giving us, triggering something. So we bought LUV. Look at this move up. What it did was we traded this, okay? We bought it here. We sold it, cashed in, but it kept us in our entire airline position in JetBlue. So we think JetBlue is next. So this is our JetBlue. Now look at JetBlue, it's starting to go. That's what you want to see. Okay? So here we go on the upside. So this is our opinion in JetBlue. Okay, give me 1 second.
yeah.
Okay.
All right. We have a comment here. Thank you for NGD video. I was home sick from work. Caught the trade right when it came out. It shot up like a rocket that afternoon.
Good. NGD is one of the, we think it's going to be this week, guys. Gold is setting up for a beautiful move on the upside, but it's got to finish setting up. This was NGD because we have this on and we like some of these gold stocks. This is one that we like a lot. This is NGG. Look at that pop. Now, you know what that is? That's an 8-year high. Okay, so you had the extension on the upside. We want this thing to pull back a little because we want to add on more. We like NGD a lot. I know this is a serious move, and it happened literally that day. Okay, we talked about it in the morning. Look at the pop on the upside. We think gold is setting up this week. That's our trade this week. Is going to be the gold market. We think the gold market early in the week is setting up for a nice pullback and a snap right back up. Okay, that's our opinion of gold. And we've been putting it on. This we put on yesterday. We're going to put on more this week of buying gold equities that we've been trading, and now we're starting to put them back on as they pull back.
Good question on PHYS.
Yeah, that's the way of being long physical gold. Okay, and our opinion is the world gold supply, metal, is starting to deplete. You haven't seen it yet. I have a way of reading it because I've been in the gold business for 5 decades. Okay, commodities I've traded for 4, gold I've traded for 5. That's a way of being long physical gold. Okay, people want to trade GLD, they want to trade certain gold equities. You want to be long bullion without buying the bullion. I think SPROT is the way, PHYS. That's a physical way of being long gold. This is it right here. Okay. Now this is one, if you get a pullback to around here, we're going to be buying it. Okay, you got these extensions. This is when gold went to 3,500, pulling back. This is one we're going to be looking at. We have spots, and we're going to look for this week. This is one of them that's going to be on our radar screen. We're going to look to buy it and get back in again. We don't have it on now. We sold it. We trade around the positions. This is one we're going to be looking to buy back.
Do you know about CEP? Do you watch that? They're
No.
saying, love to hear your opinion on it.
I don't follow it enough to give you an opinion. Well,
Okay.
It's not fair to you.
All right. Those are the comments we have right now.
Okay.
How about review the trade log
Yes.
real quick?
Okay, guys. This is where we stand. Everything is here. It's all open. That's this right here.
Yes.
This is where we stand, guys. See our trades? That's not what we're up for the year. We're up around 75%. This is just realized trades. But look at the trades, guys. They're all nothing gigantic. Okay? But you see, we're talking JetBlue, Bunge, Platinum, gasoline, soybeans, Alcoa. You see all the names we're talking about. Tesla. This is 1 or 2 Tesla trades. Okay, think about it. We put on 3 Tesla. We tried not to trade Tesla, but when they work, they work. Platinum, Mara. We just got out of our Mara. We're not crypto fans. Okay, grains. Okay, and look, and the profits are there. Okay, we put the trades on. This is from January. Last year we were up over 100%, a little bit over 105. This year we're up about 75 to date right now, just by taking advantage of the markets. We don't think the market is investable. We think the market is tradable. Like I've been saying this for the last couple of weeks, there is nothing on this board that I want to say I want to buy for my children or for my grandchildren. I don't think there's anything that attractive to invest right now. So in the interim, while the market is digesting 2 very extreme administrations, 2 very different policies, the dollar is recalibrating. So many factors right now are repricing everything. So while it's doing that, you're going to get a crazy move up, crazy move down, back and forth, back and forth. So they're tradable. If you understand the stories that we try to do, because we try to stick to our commodity views, then we take advantage of this. That's what this P&L is not being long one thing that tripled in price. These are just singles and doubles and singles and doubles. We think the market is still tradable. The world is going through a large transition, and the United States is right in the middle of it.
Okay, we have 1 more minute left.
Okay.
Our last question is, any thoughts on buying gold bars from Costco?
No, you're paying too much for these things, guys. Okay, you want to know where the price of gold is? Let me go back here. Okay, everybody's got to make money. There's the price of gold. This is a contango in it. Okay, this is kind of where the price of gold is, 324. So think of what you're paying for the price of gold. If you're paying more than 2 or 3% above that price, you're overpaying. You're paying retail. Costco, I understand you're getting something at a discount, but it's still a retail price. Anything that's between 2 and say 4% premium above where the spot gold is, it's a good deal. Gold bars are the best. Stay away from coins unless you know about coins. Okay? It's hard to get long gold. You can do it privately, fine. If you have family members, okay, but know where the price of gold is, because this is when, you know who makes more money on gold than you? The person that grabs it from you, the person who you buy it from. Okay, this is when I could sell something for 15, 20% over. This is when you could put a commercial on TV and sell it at a premium. You put the story in, everybody's get me in, they don't pay attention to the price. So use gold as your price, the futures price, and then anywhere from 2 to 4% of premium. And if it's above that, you're overpaying.
All right, that's it.
Okay, we're good? Yeah. All right, we're going to send some more clips out during the week like we always do. We'll see you next Saturday, 10 a.m. We're still working on Wednesdays. We just want to make sure. We want to see the audience get bigger. If the audience gets bigger, then it's worth it. We've been doing this also. We do it on TikTok, okay? Yeah, we're going to do one at 10:30. Mm-hmm. We're going to have 10,000 people on that, okay? Now that's the way it all started, but it takes time. But we're hoping that you're learning from these markets, okay? You don't even have to put your money on the line, but you can learn. And then when the opportunities are there, we don't trade. We're not here to trade. We're here to make money. We've been quiet all week. Yesterday we did about 10 trades. Opportunities were there. That's what we wait for. You know our opinions. We think the market's getting ready to churn on the downside. It's extending. So that's our opinion. Let's see next week how we wind up from there. I'll see you next Saturday.